Hi Moneymakers, it's Talking Sense David, a place where complex finance is made easy for all. In this video, I'm going to be breaking down how you can structure your business. So you might be someone that is starting to earn money from a side hustle, or you have a business that's been running for 2 or 3 years and now you are trying to scale it further. Now the question you're going to ask yourself is, how do I structure this? There are 4 options available to you, and we are going to look through each one. Alright, let's look at number 1, sole proprietorship. What exactly is that? This type of structure is intended for smaller size businesses with lower revenue and businesses with not that many employees. This means that your personal assets and your business's assets are not separated in the event of a default. If your business accumulates debt, you as the owner are responsible for those debts. So this means in this structure, the risk is unlimited. You have unlimited liability. That means you assume all debts of that structure. Now this type of structure is intended to be less burdensome on a small business owner, because compared to the other structures we're going to look at, it's less taxing, there are less costs involved with administration and running this type of structure. What's important to remember is that you do keep a separate bank account with your business transactions and your personal transactions, just so that there's a distinction between the two. Number 2 is the partnership. A partnership is similar to a sole proprietor, just that there are usually more than 1 or 2 partners involved in this structure. One key thing to remember is that your assets and the business's assets are also not separated, and you have unlimited liability. What that means is, if the business incurs debts, you as the partner in your personal capacity will also be responsible for those debts of the business. This type of structure is also usually for smaller type of businesses, and it's easier to dissolve if there is any issues later down the road. Number 3 is the LLC structure, Limited Liability Company. This type of structure is designed for companies that have reached a certain level of revenue or income, because with this structure comes additional costs. You can think of administration costs, you can think of tax compliance costs, and you can think of whatever other governmental compliance that your company needs to fulfill. Those costs can be very expensive, and this structure would only make sense if your business is earning a certain revenue already. The key benefit to this structure is that it separates your business assets from your personal assets. So in the event of your business going bust, only the assets inside of the business are at risk. With that being said, if you, the director or shareholder or the business owner, sign surety on behalf of the company and the company goes bust, then you as the business owner will be liable for the debts that are incurred. Number 4 is a limited liability partnership. So this is basically an LLC mixed with a partnership structure, and usually those that are in services industries like engineers, architects, lawyers or accountants will opt for this type of structure, because the key thing here would be they want to limit their risk involved or limit their liability. So in the event of their agreement or their business going under, what they've put in is what's at risk, so they've limited their personal capacity from their partnership. Okay, let's summarize what we've learned in this video today. We looked at 4 structures: sole proprietorship, partnership, limited liability company, and a limited liability partnership. The sole proprietorship and the partnership are for smaller businesses, but you have unlimited risk. An LLC and a limited liability partnership are for bigger businesses, but have limited risk because they can separate the business assets from the personal assets. The structure you decide to choose is based on your revenue and your ability to grow your business, and also tax is a very important thing to consider. If you have any questions or you have any comments, feel free to comment below. But from me, for now, I'll see you in future videos. Bye for now. Don't forget to subscribe to Talking Sense for more financial content.